2nd May 2023, Tuesday. Charlie Munger says commercial property loans is next. What's next? Bad loans. All right. We're talking about bad loans going bad, and that will happen very soon. And in fact, that will cause a lot of devastation to the US banks. I'll tell you more in detail very shortly. Let's go. All right. Disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now let's recap what happened last night. The Dow Jones basically ended down 46 points, Nasdaq up down by 14 points, S&P pretty flat, down by 1 point. Now everybody's just waiting for the FOMC meeting, and it's more than 75% chance that there will be a rate hike one more time. Although the market is now all speculating that that should be all, there shouldn't be any more rate hike, and the market is anticipating this. If Federal Reserve really says that and say that no more rate hike, the market will jump up a bit, okay? But if let's say the Federal Reserve say that, nope, we should have one more rate hike, or we'll be watching it closely, with data-oriented, blah, 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 that will spook the market, all right? And we can see that today, Amazon down by 3.2%. I'm not too sure what's the fundamental news, but I did mention to you that Amazon, to me, it should be going down again. I believe that it's going to be a base at about $95 at least, all right? So let's see what happened on the CNBC. JP Morgan Chase won the weekend auction for the First Republic Bank. So apparently part of the agreement, JP Morgan acquired all the regional bank deposit and a substantial majority of assets, all right? And CEO of JP Diamond says that the deal should help end part of the industry crisis. Now, when I read this statement itself, right, and I realized that the JP Morgan acquire all the regional bank deposit and substantial majority of assets, I just feel that they are bought at like something for $1.10, something like that in the feeling. It's just like somehow someone is very happy to buy all these assets. And don't you feel that something is wrong here? The major banks are all still okay, but the smaller banks are all having trouble, but they all do the same thing. Don't you feel that something is just wrong somewhere? What do you think? Leave me in the comment box, okay? All right. So the thing is, we all know that now the members of the Federal Open Market Committee will start their meeting on Tuesday, and announcement on interest rate on the Wednesday, which is the also followed by the press conference. Yeah. So the market is going to sit around and just wait, because everybody needs to know what's the direction of the Federal Reserve. But more importantly, that Janet Yellen just came in and said that the U.S. may run out of measures to pay its debts as soon as early as June the 1st. All right. Now, why is that so? Because apparently Janet Yellen did say that they run out of money, but it'll be like mid-June, not in the 1st of June. So it's going to be an issue here. All right. So in light of this right now, right? Joe Biden has invited a big four Congress leaders on May 9th to meet up with on the White House to meet up with this debt limit. And of course, we just need both sides to actually agree. So all we know is that these are the big four congressional leaders, Chuck and Mitch, followed by Hakeem, and of course, I think that will be, who will be next one? Mitch, yes, McCarthy, yes, sorry. All right, so we'll see what happened from here. Most likely, in my opinion, as usual, there'll be a lot of talks, some ferocious talks, but no, they'll just have to lift up the debt ceiling as usual. All right, so that is what we're looking at right now. Now, one thing is that like you see from my screen, oh, sorry for the PowerPoint issue, just give me a moment. Gosh, okay, hold on here. Okay, we can see that now the First Republic Bank, their numbers, okay, just like a few days ago, I was telling you guys, don't buy, don't buy, don't buy. I hope that you really heard me, because when it was going back up around this area here, I said that, no, this is not going to be good. And truth be told, the price gapped down, and yesterday went down to $3.51. So the thing is, it's still a lot of trading volume over here. Not too sure what is happening here, but I don't think you should be buying at all, since JP Morgan is buying in everything, right? We can see right now, right, the First Republic stock investors face wipeout. Yeah, it means everything gone. Okay, so that's how bad it is. Still think about this, who actually profited from there. All right, and the thing is right now, the post market after the announcement, the share now is 190, dropped by $1.61, 45% in a single day overnight. So if you have bought it last night, 351, thinking it's cheap, then too bad, guys. You're going to lose another 45% when the market opens as well. Now, of course, maybe if the market want to, do some speculation, they may push it up again. But I can tell you this, guys, don't catch a falling knife. This is really incredible. All right, because now more and more companies are turning zombies, okay? Zombies in the US market. What's a zombie company, right? It's a zombie company It's actually a term used to describe an uncompetitive company that needs a bailout to operate successfully, or an indebted company that is only able to repay interest on its debts and the interest coverage ratio of 1 or less. I mean, company in short, like, not doing well. And we can see the numbers is escalating. And of course, this is not a good sign, because every time when you have such a huge upsurge, right, usually that's because a recession is nearby. And from the numbers, again, it tells me that something is very, very wrong. All right, next thing to watch out for, maybe that will help the boost to boost the bull confidence. Oh, moment, sorry, there's some technical issue on my side here. Hold on a minute. Okay. All right, so the thing is this, based on what we're seeing right now, right, what happened to stocks after their last Fed rate hike? So this is a tabulation of what happened if the rate hike is over. And very interesting, only in 1974 and year 2000, we ended negative. In fact, the other months, well, at the time, right, after 12 months after the rate rate hiking stop, then this usually the market will do pretty well. Very, very interesting. So if you think that this is going to be a rate hike is going to close soon or going to stop soon, then if the market stays up, right, you may be part of statistics that shows that the market actually go up by average 13%. And in fact, right, if you look at it right now, this is after the first Fed rate. Seems like other than the first 3 months, the next 6 months, next 12 months, right, rather positive. So if there's going to be any form of, like, cutting interest rate, right, well, a lot of people are looking at there will be some selling, and I think there will be, but before that, we'll see a rally, and I think that is what it means. Okay. All right, so watch out for this. All right, this is going to be happening on Wednesday. Let's see whether the Biden, will he means his words, or this Jerome Powell means his words, or he's going to go straight to the point and say, look, let's have more rate hike because we need to curb down inflation. Yeah. Because this is the data that I collected myself, and you can see pretty interesting. This is the Fed fund rate when it's moving up, and then when it paused and starts to come down, right? You notice that, okay, when the rate started to come down, the stock market also came off. But after a while later, at the low interest rate environment, that's where the stock started to shoot up again. Pretty cool, right? Okay, it happened again back here in year 2000. Whereby the rate hike had to stop, and then when it had to reduce the rate hike, what happened to the stock market? The stock market also nosedive. But of course, not every time like this. This is whereby there's a pause in the interest rate back in 1975, but the stock market turns well. And of course, you can see that back in 1989, same thing happened again, but the stock market did okay. So all I can say is this: from now we're looking at is that the last time you saw something very rate hike, a cut here itself, right, the market went up instead because of making me feel good about it. So who knows? The market now is definitely full of short sellers, and unless there's a crystal ball that everybody has or someone has, they've not itself, right, based on the statistic. Well, if let's say once they go sideways by right, okay, from the way I look at it by right, the company should be able to move a bit more before the big crunch that will happen. Okay, so when will that be, right? I will let you guys know when I come to a conclusion on this. Yeah. Okay. All right. So that is the important chart that I have to you. And now the thing is now the huge hedge funds are betting the dollar denominators will be done. That means that they are thinking that the dollar will no longer see daylight, in fact, because now the thing is this: as the rate hike is going to peak, right, according to some people, hence therefore the currency traders are turning bear on the greenback. The statistics shows that, right, the long shot itself is pretty clear that the numbers are there. Okay, so all I can say is this: be careful, right? Things can get really out of hand. And of course, the US ISM Purchasing Manager Index. This is where usually if the indices go down to 10 or 9, well, we're going to get into some severe recession. Okay, something like that. And the thing is this: if we would ask an investor now to come in to buy, or you're near the zone here, I think no one will do it. Okay, that's the reason why I feel that there should be another wave down for this. Okay, the ISM Purchasing Manager Index. I think it will really, really help it out. Okay, all right. So with that, let me just check my mouse. Okay, Charlie Munger, why is he talking so much recently, right? So Charlie Munger is the Warren Buffett right-hand man, and he always, both of them really interact with each other, and of course, before they make any decision. And of course, Warren Buffett says that Charlie Munger is one of the smartest guys you ever know. And his smartest guy says that most money managers are little more than fortune tellers or astrologers. Excuse me. Excuse me, I'm not actually recovered. yeah, actually not feeling well, but I still want to do this ML video because I want to make sure that you guys have the best of me. Okay, so the thing is this, Charlie Munger came out and created a little scene by saying that, right, this all the current investment managers are actually bad for the country. And they feel that, right, because of the situation right now, it creates a lot of problem. And they feel that these people are really not worth the fee they charge. But of course, through the pandemic, you need all these guys to help you. But he feels that, right, the rise of the speculative retail trading was absolutely crazy. So you can understand that a lot of quick money is being involved here. But more important thing is that Charlie Munger says that now the US commercial property market is in really serious trouble. In fact, his opinion is that a storm is brewing in the US commercial property market, and it's not as bad as 2008, but it's still going to be bad enough. And he actually didn't say that he's leaving. So that means that they're going to go through this, everybody, but he said that just wait for a while, let the market come to him instead than going for the market. All right, so let's see a short video on what he shared here itself on Fox. Let's go. Oops, okay, there's a bit of sound issue. Let me see. Okay, I just realized that I haven't put on my speaker. Just give me a short second here. It's gonna be pretty fast. But my point is this: for Charlie Munger to say something like this, so it actually speaks volume regarding what I've been saying. I felt that the market is really near to get itself into some serious trouble. And of course, to me, with Charlie Munger also agreeing to this, I think that facilitated my view. Let's see whether can we get this up right now. I think it should be okay. Should be good to go. Let's go.
That we have a lot of problems in the commercial property arena, and they're not going away. And a lot of these banks, the very big banks themselves, have a lot of this on their books. Should we be worried? Kirsten Jordan, a real estate agent extraordinaire, on that aspect of the story. You know, you think of it, Kirsten, what these market brainiacs are saying is, you know, these are bad loans or potentially bad loans that could be on their books because a lot of people aren't going back to offices. The offices aren't as full. The people in the businesses that own them can't sell them, so they're stuck with them. Is that a real estate problem in general? In other words, what happens there begins to permeate everywhere.
The thing with commercial real estate is there's a lot of different facets of it that the rest of us don't really think about when it's being valued. But one of the most important parts that you just alluded to is the kind of loans that are on commercial real estate. We all, generally think of 30-year fixed mortgages when we think about loans because of the fact that as an American, that's what you are thinking when you think of real estate loans. But commercial real estate loans are usually shorter term, and they're usually higher rates than residential loans. So what we're seeing coming in the commercial sector is that the rates will probably skyrocket for some of these loans, for some of these owners or borrowers. And then the other.
All right, you can see right now, you can see the Case-Shiller index is really rushing up and is at the highest level since 2001. So it speaks volume that things can get pretty bad. Now, this entire video is pretty long, so I won't be going through this. But what I'm trying to show you now, the office vacancy is actually going up. And this is a bad sign because when you have such numbers are going up, you do know that means there is some recession is just near around the corner because people are losing their job. All right. So if all this information, you can watch a video on this particular from Fox News on Trade the Boys Facebook page. Yeah. All right, that will be all for today. Thank you very much. But do not remember this, Berkshire Hathaway did actually went in to support Goldman Sachs and Bank of America, and they know their stuff very well. And whenever they statement like this is out, we know that it's the problem is going to come out very soon. Give and take 2 to 3 months, things will get very scary because for him to say this right now, he said that it's not easy, all right, because there's a lot of trouble shopping center and trouble office building. And he felt that right now, right, every bank in the country is way tighter on real estate loans today than they were 6 months ago. That's why they're in trouble, because when the banks get into the tightening positioning, right, this commercial developers, they will get hit. And when they get hit itself, right, you can expect that if the people there are not staying there or they try to cut away from property, all this will become a big issue, right? So to me, this is just the starting point. All right, guys, I'll see you on the technical side. This is Kel signing off. Bye-bye.